Can we stop freaking out about secondary tax for once and for all? Honestly, the amount of times that this has come up in my career is mind-blowing. Now, I've studied accounting for well over 15 years, and this comes up all the time, where people are scared to make more money, which is fucked to start with, because they might get double taxed or get smashed by secondary tax. And my mate Barry told me down at the bar that you get double. Oh, get out of here, Barry. Seriously. Let's just keep it really simple to start with, right? You get taxed on your overall income in this country. And one day you might have rental income, you might have dividends, you might have interest income. And all of that is actually going to get taxed at your marginal tax rate if it feeds into you as an individual. So let me give you an example. Let's say that you've got employment income, you've got dividend income, and you've also got interest income from the bank. All three components of that add to your overall income. And then you move up the marginal tax rates in this country. So we have a progressive tax system. You do not get taxed a single rate in this country. And some people will say, well, you can kind of divide your tax by the income and that gives you your average rate. No, don't complicate it. Let's just keep it simple. As you earn more, the portion of income that moves up through that bracket is taxed at that rate. Your total income isn't taxed at a singular rate. Now, secondly, you're not taxed based on the number of jobs that you have. So let me give you an example again. Let's say that you have one person and they have two jobs and they earn $70,000 combined from those two jobs, and then you have another person who earns $70,000 and they have one job. Both people will pay the same amount of tax. How I think this got confusing for people is that we do have secondary tax rates in this country. And years ago, what it was designed to do was to tax you slightly more so that if you moved up into a higher tax bracket on that next form of income, you weren't dramatically underpaying. So let's say you were hovering just around the income level that would have taken you into the 30% tax bracket, but you're only being taxed at 17.5%. What the secondary tax rate was designed to do was to tax your second income a bit higher throughout the year, so that at the end of the year, when the IRD assess your total income and see how much you have earned, they've ensured that you have paid enough tax on the total income. Because if they just taxed you at the smaller rate on income stream 1 and 2, and then get to the end of the year and realize, oh, you've been undertaxed, then the IRD are at a risk that you're not going to be able to pay the difference. So I think that's where the confusion came from. People started talking about, oh, there's these secondary tax rates and you're going to get double taxed and it's not worth it. They take 60% of your income, and all of this bullshit that has been thrashed around by Kiwis over the generations and over the years. But it's a little bit silly, because you don't want something like this to be the thing that stops you from earning more. Now, often as well, I'll hear people, they don't want to do overtime because then they're going to get taxed at too high of a rate. Again, your overtime would contribute to your overall income, and your overall income is what you get taxed on. So we're taxed from 1st of April through to 31 March each year based on that total income. Now, I do see some people who then may lose family tax credits, for instance, and so then they don't want to go and earn more or do overtime or get a second form of income because they might lose some of those credits. Now, that sort of makes some sense, but remember, the goal is to not need money from the government nor from other taxpayers. It's to become self-reliant, but the system traps us in this way where we think, well, if I go and do that extra work, I'm going to lose time at home with my family, and I'm also going to lose some of those family tax credits, as an example, that I might be currently getting. And so you think, well, I'm not going to go and do the work. But eventually, you want to think a bit bigger than that, or you want to think, okay, what happens if I've got bigger goals than that? What levels of income do I need, and do I need to earn so that I can then start to build assets or do whatever it is that you want to do in your life? But of course, there will be some people that want to prioritize time at home, and so I can see how they can come to that conclusion that they won't go and earn that extra money. Now, let me just take you through some of the tax rates, because they have changed recently in New Zealand as well. So Now, the 10.5% tax rate kicks in from $15,601 to $53,500. As soon as you then earn above $53,500, you're going to get taxed at 30% up to $78,100, from $78,100 to $180,000 at 33%, and from $180,000 plus, you're going to get taxed at 39%. Now, let me give you an example, because this is the easiest way to understand it. If you earn $200,000 in this country, which not many people do. Now, what is 200,000 bucks? I think 180,000, about 2.5% of Kiwis earn that. So 200,000, probably 2%. 2 out of 100 people would be earning 200K. But think about it. Now, they're not going to get taxed at 39% on their whole $200,000. No, they're going to get taxed at 10.5% on their 0 to 15,600, then at 17.5% for the income between 15,600 and 53,500, and then at 30% from 53,501 to 78,100, then at 33% from 78,000 to 180, and then at 39% for the $20,000, which is the difference between $200,000 and $180,000. Now let's go all the way back to our secondary tax example and thinking. So Barry the bozo has fucked people up down at the bar telling everyone, oh, don't do that, man, don't get a second job, you get second tax, it's not worth it. Shut up, Barry. You don't know what you're talking about. You don't get taxed on your jobs, you get taxed on your income. So let's say that you were making $80,000 already. Actually, let's use a different example, and so that we move up through the tax bracket. Let's say that you're making $45,000. So you are going to get taxed at 10.5% from 0 to $15,600. And then from $15,601 to $45,000, it would be taxed at 17.5%. Now then you get a second job and you're going to make $10,000 doing that job. Now you're going to have a total income of $55,000. Just because you then now earn over $53,500 doesn't mean all of your income is going to get taxed at 30%. Just the money between $53,500 and $55,000 is going to be taxed at 30%. So your tax on that $55,000 would look like this: 10.5% between 0 and $15,600, from $15,600 to the $53,500 at 17.5%. And for the $1,500 between $53,500 and $55,000 at 30%. So yes, this is where I think people do get confused too, and they get hurt by it, because as they earn more money, a portion of that moves from 17.5% to 30%, and that's when we really start to feel it, right? When we move from 17.5% in tax to 30%. It can start to feel pretty brutal when you're losing 30%, 33%, or even 39% of your income over a certain bracket. But the main thing that I want you to take from this video is that you can't let people tell you not to go and make more money, because secondary tax will ruin, you know, your income earning capability, and it's not worth it, and all of this shit. You've got to learn a little bit more about taxes in this country so that those people don't brainwash you. One of the things that's really important to focus on in this country is actually increasing your income. And it's very un-Kiwi to talk about it. We don't like talking about, oh, don't be too greedy, you don't need that much, why are you doing that? I'll tell you why. Because food's fucking expensive down there at the Countdown. Oh, because food down there at the mall is pretty expensive too. Oh, because my rates are increasing. Oh, because my insurances are increasing. Oh, because my car repairs are getting more expensive. So we are perfectly fine, and it's okay to focus on increasing your income. But if someone comes along and says, don't do it, man, secondary tax, not worth it, you're going to end up stuck with them, and things are going to happen in your life. And what are you going to do? I'm going to take out more debt. Credit card, Gem Visa, put that one on Afterpay, or, you know, worry about it later, borrow from a friend, borrow from a loan shark. Then you're in trouble. Then you actually have to go out there and figure out, how am I going to make this cash? So please understand our tax rules in New Zealand. They're not that hard. There's heaps of knowledge out there. There's heaps of information. The IRD have great resources these days as well. They're not the big bad wolf. Barry down at the bar is the big bad wolf. He's the one spreading the misinformation, fucking people up and stopping them from chasing extra income. Hopefully that helps you. We'll see you on the next video. Secondary tax, get out of here.